Hey traders! In the ever-evolving landscape of financial markets, traders are constantly looking for strategies that offer both flexibility and profitability. One such approach that has garnered considerable attention is swing trading. Unlike traditional buy and hold strategies or day trading, swing trading involves capitalizing on short to medium term price movements within a broader trend. This means in this comprehensive video guide, we delve into the world of swing trading by exploring a trading strategy that combines free next generation indicators. This means whether you're a novice looking to expand your repertoire or a seasoned trader seeking to define your skills, this video is your roadmap to mastering the swing trading approach. But before we begin, I would like to ask you for a quick favor and show your support for the video by hitting that like button, as well as subscribing to stay up to date with our future videos. Thanks. Firstly, let's start off with the indicator setup and rules for entry and exit. On the chart, I've selected the euro against the US dollar in the 4-hour time frame. Now, under the Indicators tab on TradingView, I'm going to add the Trend Focus, Supply Demand Pro, and Volume Force Pro panel. Our first indicator is the Trend Focus indicator, which assists in identifying and capitalizing on prevailing market trends, ensuring we align ourselves with the right side of the market. Then we have the Supply Demand Pro, which identifies key support and resistance zones. Then lastly, our Volume Force Pro panel equips us with the tool to spot volume breakouts, ensuring we have enough momentum for the trade to play out. Now, under the settings for the indicator, we are going to make the following changes. Firstly, for our trend focus indicator, we are going to leave everything on default, as this indicator will serve as our main entry and exit indicator. Then for the Supply Demand Pro, under the Inputs tab, we are going to unselect the following. Firstly, we'll unselect the Take Profit and Stop Loss options to clean up our charts, and then unselect the arrows as we'll be using the buy and sell signals from the Trend Focus indicator. Lastly, for our Volume Force Pro panel, we'll leave everything on default. With the indicators all set up, we are ready for the rules for entry. Now, for a valid sell trade, firstly, we are waiting for price action to be taken away from a supply zone, which will be marked in red. Then after this, we are waiting for the trend focus to give us a sell signal. Once we receive the sell signal, the Volume Force Pro histogram needs to be below 0 and also below the average line. Now, once the sell signal candle has closed, we can enter our trade. For the sell trade, I will place my stop loss above the trend focus line at 115 pips and aim for double the return. What this means is for this example, my take profit will be set at a nice 230 pips. By combining these free next generation indicators and cross-checking our analysis against them, we have created a complete swing trading approach that covers supply and demand zones, trend analysis, and momentum. Next, let's look at the exact rules for entering a buy trade. On the chart, I've selected the US dollar against the Japanese yen in the 4-hour time frame. From the chart, we can see price action rejecting away from this demand zone with multiple rejections away. Then we see price action crossing above the trend focus and giving us a buy signal with the line changing color. Lastly, when we receive the buy signal, we can see that the Volume Force Pro histogram is above 0 and also above the average line. So once all of these criteria are in place, we can enter our buy trade. Remember that we need to wait for the candle to close to confirm the signal. And for this buy trade example, I will place my stop loss below the trend focus and recent market swing at 123 pips and aim for double the return. What this means is for every 1% of the account that I risk, I aim to make double the return. Now that we have covered two forex pairs, let's continue by applying the strategy to a stock trade. For this, I've selected Nvidia on the daily time frame. When trading stocks, it's important that we are aware of events that have significant impact on price. For example, dividends and earnings play crucial roles in determining the underlying value of the stock. Thankfully, using this long-term approach to trading, we can take advantage of these big moves. Additionally, TradingView empowers traders to stay up to date for these kinds of events as they are easily identified on the chart. Now, from the chart, we just received a buy alert from the trend focus indicator after price action rejected away from the demand zone, which is marked in green. Of course, the indicator offers alerts, meaning you don't have to spend all day in front of the chart watching for signals. Now, once we get the buy signal, we need to check the Volume Force Pro to know if the market has enough bullish momentum for the trade to play out. This means we are looking for a histogram above zero and also above the average line. Now, once the candle has closed, we can enter our buy trade. And for the buy trade, I will place my stop loss below the trend focus and market swing and aim for double the return. Now, you might be wondering, what if I missed the initial buy signal from the trend focus indicator? Then all you need to do is to wait for price action to approach the trend focus and reject away like this. Then you can enter the trade or add to your existing position. Next, let's explore another stock trading example. For this example, I've selected Tesla in the daily time frame. And from the chart, we can observe multiple rejections away from a supply zone, which has been marked in red. Additionally, we see that price action has now crossed the trend focus line, and this has generated a sell signal. Lastly, the Volume Force Pro histogram needs to be below zero and also below the average line. Once all of these criteria are in place at the close of the signal candle, we can enter our sell trade. For the sell trade, I will follow the same rules as before, placing my stop loss above the trend focus and aim for double the return. By following the rules of the strategy, we can avoid false signals by waiting for multiple confirmations before entering these high probability trades. Next, let's look at trading a cryptocurrency using the swing trading approach. For this example, I've selected ETH/USD or Ethereum against the US dollar in the 4-hour time frame. From the chart, we can see that we have rejected away from a demand zone, which is marked in green. After that, we received a buy alert once price action had crossed above the trend focus line. However, this time from the Volume Force Pro, we still need additional confirmation, which is currently missing. In this case, what I would do is wait for the Volume Force Pro to align with the rest of our indicators. This ensures enough momentum for the trade to play out and that we don't get stuck in a sideways market. Now, once the Volume Force Pro histogram moves above the zero line and also above the average, we know that there'll be enough bullish momentum for the trade to play out. For this buy trade, I will place my stop loss again below the trend focus and recent market swing. And then for the take target, I will aim for double the return. By following a high risk to reward ratio, we can ensure long-term profitability following this system. Next, let's explore our last trade example. However, before moving forward, if you found this video helpful, please drop it a quick like. Thanks. For our last trade example, I've selected the British pound against the US dollar in the 4-hour time frame. From the chart, we can see that the pair was in a downtrend with the trend focus colored red. After this, price action approached this demand zone and was rejected away. This shows us an increase in the amount of bullish sentiment after these two rejections. Now we are waiting for price action to cross above the trend focus line and the indicator to give us a buy alert. Once we get the buy signal, we can take a closer look at the Volume Force Pro for our final confirmation. From the Volume Force Pro, we see a histogram above zero and also above the average line. Now, once the candle has closed, we can enter our buy trade. For the buy trade, I will place my stop loss below the trend focus and recent market swing, and then aim for double the return. In summary, we've explored the world of swing trading, focusing on a strategy that integrates three next generation indicators into a cohesive trading approach. By combining the trend focus, supply demand pro, and volume force pro panel, we've crafted a systematic method for identifying high probability trade opportunities across various markets and timeframes. So, if you haven't already, make sure to visit our website and take a closer look at our exclusive TV Champ membership. With the TV Champ membership, you'll gain access to all of the indicators featured in this video, plus multiple other next generation indicators. So, I hope that you found this video helpful. Until next time, happy trading. Bye.